Assalamu Alaikum everyone, welcome back to the channel. In today's video, I'm going to share with you 5 different companies that are currently undervalued and they have what's called a wide moat. Before I get started on the video, I just want to mention something about last week's video. So last week I posted this video that compares basically FedEx and UPS. Now, after I posted the video, one of the brothers, mashallah, said, according to Zoya, which is the app that I have been using when it comes to checking whether companies are Sharia compliant and so, okay, he basically mentioned the FedExes actually have a very, basically are in debt really. And, I apologize, I actually haven't checked it recently. When I first basically last checked this company, I think was just before the last earnings, so not the one that it released recently. I think the one before that was the last time I checked, and they were fine at the time. And I actually didn't think they will be in debt because I was quite surprised because UPS and FedEx they generate a lot of profit, and I thought they would never be in debt. So I apologize if you have if you watched that video and you felt like, okay, let me add it to my watch list or whatever. So apologies. I put a note on the video straight away as soon as the brother mentioned. And this is the reason I started creating this channel in the first place is just to share my journey. And just obviously to share that with you and obviously hold accountable to one another, because if I make a mistake, someone else needs to correct me and say, brother, this is not right. And I will do the research. And if I make a mistake, obviously I'm a human. I will admit to it. And I apologize if you have either invested in the company or you started looking in on whatever, you just wasted a lot of your time. But UPS is still fine. The companies that we're going to talk about today, I've looked at all of them. They are Sharia compliant. And I believe majority of the companies that I have shared with you so far have been basically Sharia compliant. But again, things can change very quickly, because once a company releases its earnings, anything can happen and they could potentially become non-Sharia compliant. But so always check, always do your research. Obviously, I'm going to share with you my view on what I think about the companies, but ultimately that decision lies with you before you start investing. And if I make a mistake, obviously let me know, inshallah, and I will admit it and I'll put my hand up and just inshallah wouldn't happen again. But if it happens, please let me know, and I appreciate that. And I appreciate actually that brother who actually spotted that mistake. So shukran akhi, thank you. Right, so now we're going to look at the company. So I don't know what happened today. Actually, I just opened my account and I've just realized it's actually down quite a bit. I think from this morning it was 32,668 pounds that I had in the account. Right now I've lost about over 400 pounds. So I don't know, the market hasn't even opened yet, so it's interesting. Anyway, I'm not really a day trader. I don't really care. If I see companies going down, and the way the market has been acting so far is very strange. One day is up, the next day is down. But again, I have been taking advantage of that and buying a couple of more stocks, basically shares in the companies that I really like. And if you want to keep up with that, if you go back to my account and just click the Instagram icon there, it will take you to my Instagram account where I actually share. Normally I try to share if I'm doing any buying. I don't normally sell anyway, but if I do any buys or sales where I get dividends paid and things like that, so have a look at that if you are interested. Right, so let's now start looking at these companies. But before we do that, I want to explain what an economic moat means. Okay, this is a term basically that Warren Buffett came up with, and basically it refers to a company's having a competitive advantage over its competitors in order to protect its long-term profit and market share for the competing firms. What that means is basically if a company has a basically economic moat, that means it has a competitive advantage over its competitors. Okay, so, and that's a very good thing. That's what you should look for when you are investing. Companies that have a competitive advantage, or companies actually that are monopolizing the market. So if it's a company that either has a competitive advantage or monopolizes their market, then that means they will last longer than the other companies, because the other companies have to catch up with these companies, right? So that's basically what it means. If I talk about moat, that is what it means. And Morningstar refers this to as a either wide moat or narrow or whatever. So I'll show you that in a sec. So all the companies that we're going to talk about today has a wide moat and they are undervalued according to Morningstar. Morningstar is a website that needs that you have to pay for if you want to use. I actually do like it because I feel like a lot of their analysts are quite realistic, and sometimes they might be very kind of harsh on certain companies, whatever, but that gives you a marginal safety. Whenever you buy any stock, if it says the stock price should be £20, okay, you should always have a margin of safety. So instead of paying £20, wait for until it's £15. So just in case something happens, you've got at least a £5 kind of leeway kind of thing, right? So you don't want to pay for the exact price the analyst is saying. You just want to take a little bit out of that and then invest in the company. That will give you what's called a margin of safety, and I feel like that's what they do in Morningstar. So that's why I'm quite happy to actually pay for whatever I'm paying for right now, to actually have the subscription and be able to use their website. Right, so the first company that has a wide moat and is undervalued, or 4-star at the moment, it's supposed to be, if the fair value should be the 94, currently 75, is Merck. Merck is a pharmaceutical company. They make a lot of drugs, and one of their biggest drugs is actually a thing called Keytruda, which is for cancer, I think. Recently, for the last couple of days, they've been on the news, and if you go to, for example, Google and just type their name, what you will notice is they actually purchasing this company for $11.5 billion. The company apparently produces drugs basically like a rare diseases and so on, and they have a drug that is on the phase 3, which means it's the last phase. So if that drug is actually good and successful, then that means this will be added to their overall revenue, which is great. And this is one of the reasons I actually like this company, because not only do they do their own drugs and whatever, they obviously purchase and spend a lot of money purchasing other companies that are small but actually doing great jobs, whatever. The other thing I've just saw today as well was they're seeking basically emergency authorization for oral COVID treatment after basically compelling result in trials. So apparently this is happening just today. It's been posted about 1 hour ago. Again, very good thing for me, very good thing for anyone that's investing in this company. Just to quickly show you, I do have, I think, about 25 shares worth of almost 1,300 something. It's slightly down at the moment, about 2%. So I'm not worried about that, but this is one of the companies that I like. And this is the reason why this company has a wide moat, okay? The fact that they have a lot of patents, okay, they have a business model that is actually shielded from all of that because of the patents, because of the economies of scale, and that is basically one of the reasons why this company has a economic moat. As well as that, they have the drug called the Keytruda, which is basically something they came up with. They have a long-term patent for that one, so they're not gonna basically give that away anytime soon. So the revenues coming from that is actually, I can't remember exactly, but it's one of the, when you look at their revenue breakdown, that a lot of their money comes from that that specific drug. And now the fact that they actually purchase in other companies and they get into the COVID, and I thought COVID will be over soon, but then again, the situation has not changed yet, and I don't know if it's going to go away anytime soon. So a lot of companies actually developing drugs and kind of getting into the market already. They might be a little bit too late in my opinion, but I think if it stays, I hope it doesn't, but if it stays around for a long time, then obviously they will benefit a lot from that. And this is one of the reasons I'm actually, in a way, it's good to have these companies doing this kind of things, because obviously ultimately they help us. But I always feel like, are they taking advantage of the situation? I don't know, only Allah knows. But anyway, yeah, so this is one of the companies I've invested in. It's a great company, it's undervalued at the moment. They have a wide moat according to Morningstar, if you're interested, have a look at the company, dig deeper, understand the business model, how things work, look at key ratios. Okay, the key ratios will tell you a lot. So return on assets, for example, return on equity, the margin, net margins and things like that, or net income, growth. Have a look at all of that and just see if they pay any dividend, if they have free cash flow. So at least this company has a $5 billion in the bank that they can use if they wanted to. And their debt to equity ratio is less than 1, which is absolutely brilliant. Right, the second company we're going to look at is Aspen Technology. This is a tech company. So let me just quickly show you what it looks like. So is a leading global supplier of software solutions that optimizes asset design, operations, and maintenance in a complex industrial environment. Again, I haven't done a lot of research on this company, so it would be interesting to find out exactly what companies they work with, what do they mean optimize asset designs, operations, and things like that. So look into it if you're really interested and you want to look into this company. They seem to be around for a long time. They have a very good business model. The fact that they have a business moat and the fact that they are quite undervalued is a good thing at the moment. So the 4-star at the moment, it should be 151 fair valued, but they are currently trading $122 per share. So 4-star is actually quite cheap. And when you look at the economic mode, it says we assign it wide moat rating as SPN, driven by a customer's switching costs and further supported intouchable assets. This part means that is the one thing a lot of these software companies have, or if the company is doing some sort of software and they don't have a customer switching cost, then that means they don't have a moat. What that means is once a company buys the software from this company, it's hard for them to change. It's hard for them to, for example, if you're using Salesforce and 360 software, then it's very hard to leave that environment. The same goes for Microsoft. If you have Office and their servers and everything else, it's very difficult to switch to another company. So this company apparently has the same sort of a thing. And then they obviously have basically an ROIC of approximately 40%. That is very, very high. That's return on invested capital. That is very high. That is probably one of the highest I've seen. That's very interesting. In fact, I might be interested in this company, look into it a bit more detail. But yeah, so that is one of the reasons why this company has a higher moat. So again, look into it if you're really interested. The ticker symbol is AZPM. It's 4 stars. It's in the technology sector. So if you're underweight into technology, you might want to do a bit more research and find out about this one. And just quickly to compare what's going on in other websites for the same company, you're looking at about 148 if you want to check TipRanks. TipRanks is another website that I've been using lately. They don't have that many analysts to look in this company because it's quite small. It's only $8 billion market cap. So I'm assuming it's quite small, and a lot of analysts are not really interested, but they don't pay any dividends either. So currently it's supposed to be 148 from 122, so that's a quite a few percent upside. So you might want to look into that company if you're really interested. Right, so the next one is Salesforce. Salesforce is some company that I've been banging on about for a long time. It still is 4-star. Is supposed to be now, is kind of keeps going up the fair values because of the latest earnings and because of what they said recently. So currently should be about $312 per share, but it's trading $271 per share. And like I said in the other, when I was talking about the other company, Aspen, they actually do have they have a wide moat. And that is a lot to do with the software that they provide. So their software system is quite similar to Microsoft. Once you get in their environment and you're actually using their platforms, it's not easy to switch because they provide you the cloud side of things, the marketing side of things, the data analytics. They have almost everything and basically a company needs. Okay, and once you're in that basically environment, okay, you become part of the company. You literally, it's not easy to leave at all. And one thing I absolutely love is the software as a service product. That means every single month or every single year, companies have to basically pay this company. They can't just buy the software and then say goodbye. They have to pay subscriptions, and this is the reason why I absolutely love this company. I'm definitely going to add to it. Okay, so far I think I've got 8 shares. I'm going to get hopefully 10 or maybe to 15 shares before it hits that price target, hopefully in the next couple of weeks. So yeah, if you're looking at another company in the software side of things and you're interested in this company, look into Salesforce. A bit more detail, go to their website, read their 10K and understand how the business model works. Looking at again, TipRank is $319 per share. That's the average. Highs of 375, lows of 248. So at the moment it's basically 271, and basically according to here is 312, and according to this is 319. So there's not much difference, but they again, both of them are kind of saying the same thing. And when you look at all these analysts that have looked at this company, you can see is actually there's so many people looking at this. It's unbelievable. Okay, there's some companies there's only one or two analysts, but there's so many of those looking at, and every single one of them is saying it's got a bit more upside than actually downside, so which is very good. So 340, 330, kind of same range, 375, that's probably the highest I've seen. But yeah, so look into it if you're really interested in Salesforce. That's another company that has a wide moat and is undervalued at the moment. Right, so the next company that we're looking at is a company that I absolutely love, and I have majority of my money. I think I put in, if I quickly click this, Microsoft is my highest, and I've got £3,366 in there. I am planning to get to 20 shares very soon, so I might add to it. I don't mind if it is about 12% of my overall portfolio, because I absolutely love this company. Right, it's currently 4 stars. It should be fair value, should be about $325 per share. Currently 281, 82. I mean, the company is great, and what they're doing is absolutely brilliant. Their business model is excellent. Everything about the company, basically they have so much growth. And if you think about, if you work for a company, I bet you they use some of their products, whether is they're using their servers or they're using their cloud side of things, they're using their office package, whatever it is. Majority of the companies out there will have some sort of a Microsoft product integrated into their systems. And then you've got the gaming side of it. Okay, you've got a million other things coming up, the laptops, the tablets, the desktops. So this company is absolutely brilliant. I absolutely love their business model. It's excellent when it comes to, when you look at everything about this company, whether it is their net growth, whether it's their return on equities, return on assets, or net margins, or the debt, or free cash flow, $56 billion in free cash flow. That you can't. That's absolutely unbelievable. I love this company. And then you've got TipRank, which is saying currently $336 per share. And when you look at it again, similar thing to Salesforce, there's loads of analysts actually looking at this. Sometimes you don't want to believe what they're saying, but if majority of them are more or less agreeing with each other, then that means maybe the company is actually valued around that price. And every single one of them, there's 20% upside, 45%, 18%, 19%, and so on. This is the only one that has a sort of a downside. Other than that, they still say it's a buy, but just about 2.5% downside. Okay, so $275 per share. Currently is $281 per share. Right, that's Microsoft, and that is the fourth company that we were looking at today. So the final company that we're going to look at is Taiwan Semiconductor. This is TSM. TSM is based in Taiwan. It's a foundry company. That means they don't actually design semiconductors or chips. They actually get it from like AMD and Microsoft, and not Microsoft, Apple and whatever. They design it, they give it to them, they make it. Okay, they're now building a factory apparently in the US, so that will be interesting to see. They are in demand at the moment, and they have basically fair value of $133 per share, and as you can see, currently trading $111 per share. They do have a wide mode because there's not that many companies out there like this company. Basically the other one is Intel, and Intel has absolutely lost track of what they're doing right now. So this company is really, if this company goes down tonight, 90% of the chip makers actually will go down, because they are foundry. They the ones who actually basically make these things. Okay, they know how to make it, whereas other companies know how to design it. And their moat comes from, if you look at it here, And the white mode stems from it is cost advantage and intangible assets. So cost advantage, because of where they are in the world, it's actually easier and cheaper for them to make these chips for a cheap price. Okay, even though they charge a lot of money, is it basically the cost of making them, the chips, is actually not as much as it would be in probably in the Western world. Okay, and when you look at the price, basically current price, and basically the upside is actually absolutely amazing. Now if I show you quickly, if we look at the TipRank again, the same thing, $138 per share. Here they're saying about 133 per share. Now if there's no analyst looking at this company, or maybe I don't know why they're not looking at it, but I believe this is going to be, for me anyway, I absolutely love this company. I own, I think, about 12 shares. I've been adding to it recently. I don't have it in free here, but I've got them in Freetrade, because they don't have, in Trading 212 actually does not have any of the Chinese companies trading on the ISA accounts. It's only for the invest, and they invest, basically I can't use that invest thing because they loan out their shares, which is not Sharia compliant. So yeah, TSMC is one of my holdings. I've got about 12 shares. Really great company, so look into it if you're interested. I want to share one more company because I feel like this company deserves a shout out as well, and that is Unilever. Unilever is UK based, Dutch based. Okay, they own millions of different products, household kind of stuff. They're absolutely brilliant. They currently, for the US side of things, so in US dollars, they trade in $59 per share. It's supposed to be about 54, so it's 4 stars at the moment. They do have a white mode, which comes from, so if we go back here and click white mode, you can see we think it has a white economic mode driven from 2 sources. It's enrichment in the supply chain of retails, so that is untouchable assets and unintangible assets, and the cost advantage as well. One thing I really like about this company is the fact that their products is not just for example, for the UK consumers only. Okay, it's worldwide. So if you're buying this company, and if you're buying shares of this company, what you're doing is really investing in the emerging markets as well as UK based, America based kind of company. So I really do like this company, so I'm just going to give a shout out again. When it comes to this company, I do own, I think, about 33 shares of this company. There you go. I'm down at the moment about 8-9%, but their dividend is really great. I think I don't know how much they paid me recently. Let me have a quick look. I've been buying the stock recently, so I've got about £11 for owning about 30 shares. So next month I will get definitely a bit more than that, so we'll see how that goes. But yeah, great company, probably want to add to your watch list. Do a little bit more research. Someone recently mentioned it might not be Sharia compliant, but according to Islamically and Zoe, it is Sharia compliant. I looked at their product and they have, and to be honest, there's nothing in there that I thought will be non-Sharia compliant. So again, if you have any information on that, just let me know. But one of the brothers mentioned it, and I did a little bit of research, couldn't find anything, but I don't think it is yet. Right, I'm going to stop the video there. I wanted a very quick video, but now it's like almost 20+ minutes. But I hope you enjoyed the video. It was kind of, let me show you the rest of the stocks on that list. So there's loads of companies in the Wide Moat Undervalued Stocks, and some of these companies I've never even heard of them. But obviously some of them sell alcohol, or Berkshire Hathaway, which I'm not really going into, and British American Tobaccos, again, absolutely no. Some of them are not Sharia compliant. KO is in there. So if you're interested and you're not worried about the fact that they started making alcohol basically soon, then you look into it. And like I said, some of them are not Sharia compliant, but JSK, which is British based company, I really like them, but then they haven't done anything for a long time, so I don't even know where they are at the moment. RB, which is, I think, again, UK based company, is a good one. This one is good as well, Roche Holdings. But yeah, so look into it, and if you're interested in any of these companies, I don't know if some of them are Sharia compliant or not, but the ones that I'm interested, that is the ones that we talked about today. So Aspen is in there. We've talked about what else did we talk about? I think they're all in here. We could talk Merck, Microsoft. We talked about Salesforce and Unilever and TSM as well. I hope you enjoyed the video. Take care, everybody, and Tomorrow I think I'm going to release another video, or maybe midweek, inshallah, just going through everything that I own in my portfolio, just to kind of break down. And this time I'm actually going to do it slightly different, so stay tuned, inshallah. I'm going to do slightly different way of sharing the stocks that I own and why I own. So I'm going to explain why I own every single stock in my portfolio. Anyway, let me stop there. Thank you very much. Assalamu Alaikum.